With a promise to keep a vigilant eye on economic currents, the Central Bank of Nigeria's Monetary Policy Committee, MPC, has increased the benchmark interest rate by 200 basis points to 24.75% from 22.75%. Arise News correspondent Nkechi Nana was at the briefing, and she tells us more.
At the second Monetary Policy Committee meeting of 2024, Nigeria's central bank unveils a series of pivotal decisions, including raising interest rates for the second time in a matter of weeks to cool inflation.
Decisions of the MPC. The committee's decisions are as follows. 1. Raise the MPR by 200 basis points to 24.75 from 22.75%. 2. Adjust the asymmetric corridor around the MPR at plus 100 to 300 basis points to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. 4. Adjust the cash reserve ratio of merchant banks from 10% to 14%. And 5. Retain the liquidity ratio at 30%.
With inflation soaring past the 30% mark in annual terms, its highest in nearly 3 decades, the bank keeps tightening its grip on monetary policy. Governor Olayemi Cardoso highlights the committee's resolve to combat these price pressures, with expectations set for a moderation starting May.
The considerations of the committee at this meeting focused on the current inflationary pressures and the need to anchor inflation expectations, as well as ensure sustained exchange rate stability. These considerations underscore the importance of the CBN's commitment to the price stability mandate and the need to urgently bring inflation under control to ensure that purchasing power of ordinary Nigerians is restored in the short to medium term.
In addition to the interest rates, Governor Cardoso articulates the committee's broader economic strategy, underscoring the bank's stance on several key issues currently shaping Nigeria's economy.
With respect to the foreign exchange forwards, we determined that a number of these transactions did not qualify, and I've said this before. In some cases, you had some requests which, well, you actually had some allocations that were made in millions of dollars, which were never requested for. You also had some where they had no naira, and they were also allocated, huge sums of foreign exchange, and the list goes on. And it was for that reason that we refused to validate those particular transactions. We refused to validate them because, apart from the fact that documentation was not satisfactory, in many cases, they were outright illegal. We have been consistent in saying that we will withdraw from direct interventions. The fertilizer that was given out was the residue of an intervention that had been done before we came into office. It was not something that was done directly by us. And the options were either to leave them there to rot away or to give them to those that we believed had the capacity to distribute. And that is exactly what we did with the handing over to the Ministry of Agriculture.
With the nation's eyes fixed on the Apex Bank, there's hope that the rigorous approach to quelling inflation crisis and bolstering the naira will lead to further policy tightening at the upcoming MPC meeting scheduled for May 20th and 21st, 2024. Nkechi Nana, Arise News.
Joining us now on the morning show as we dissect the decision of the Central Bank of Nigeria's Monetary Policy Committee, the MPC, is Tilewa Adebajo, Chief Executive Officer of the CFG Advisory. Good morning, Chile. Thank you very much for joining us.
Good morning, Ruben.
Well,
good morning, Vimba, and good morning.
Morning, sir.
Big question. Nasima is speaking through his president, that this further tightening, monetary tightening, is going to lead to severe repercussions in terms of borrowing, in terms of spending, in terms of, the capacity of businesses to access credit, and for even ordinary individuals who may need to take loan, particularly SMEs. And that Nasima, to just cite one specific example, thinks that, there are other ways, instead of following the textbook rule that the MPC continues to follow. Even if the CBN governor says that if inflation goes down further and more is achieved with regard to foreign exchange, and stability of the naira, that when MPC meets in May, we could see a different situation. But what's your own assessment? And is this the way to go to get to that $1 trillion economy that the Tinubu administration says is their target?
Thank you very much, Ruben. First of all, I think let's move away from this 1 trillion economy so that we're not mixing apples and oranges, and let's focus clearly on this issue of increase of interest rates and the issues with inflation so that we're clear. First of all, I think it's important to understand that there's a huge fiscal contribution to the current stabilization of foreign exchange and also increase in foreign portfolio investment flows. The fiscal side also has to carry this burden because as interest rates increase, it's not only for the private sector. Interest rate is also going to increase for government because government is now offering securities at a higher rate and the cost of borrowing for government is also going to go up. So there's heavy lifting that also needs to be done on the fiscal side to do that. And if you take a look at the data I sent to you this morning, I think we saw that revenues for last month was about 2 trillion. And they actually only shared about half of that. And if they continue along this revenue drive rate, then we should see revenues at close to 24 trillion.
So that we don't know what our governors do with the
exactly. So
with the money that they get.
Delta got 38 billion, Lagos got 24, Rivers got 24 billion. So there is some sort of ease on the fiscal side. And I think what I want to say is the fact that this economy has been in disequilibrium. And we're now returning to a point of equilibrium. And let us also understand the reason why interest rates were increased. Interest rates were increased because, unfortunately, we had a situation of 30 trillion of ways and means, which caused a distortion in the economy and put the economy into disequilibrium. So you need to restore order because what happened? Nasima that is also talking about it. Nasima also cannot put out products anymore because we've become a sachet economy. People cannot afford. Purchasing power is being eroded. So it is Nasima, it's in the interest of the whole economy for us to be able to bring down inflation. And within the next 6 to 9 months, I think we all need to be able to tighten our belts to be able to resolve these issues. And why has that happened? You are now seeing an alignment between fiscal policy and monetary policy, and also with investment policy, because now the foreign portfolio investments are now coming in. At the rate we're looking at now, $1 billion a month, we'll probably see close to $12 billion of foreign portfolio investments here. Let us also take a look at a historical perspective. Now, in 2019, we had $25 billion worth of capital importation in this country. In 2013, 2014 also, we had another 20 billion. Last year, maybe we had less than $2 billion. So there's something we have done to distort a significant flow of foreign exchange into our system that we need to restore. So on top of that, government has $10 to $15 billion they used to spend on subsidy. And of course, you know that the diaspora remittances are now approaching close to 30 billion. So at any given point in time, if we get this economy right, we'll get $25 billion from capital importation, another 25 from diaspora remittances, which is 50 billion, and then you can expect the government to get another 10. So there's close to 60 to $65 billion potential of capital importation into Nigeria on a yearly basis. But the distortions in our economy is why this is not coming in. So why does the governor of the CBN has to raise interest rates? The monetary supply in this country, which we call M3, total money supply, increased by 40 trillion in 1 year, and is right now at close to 95 trillion. If you put all this kind of money into the system, you need to tame inflation. So like I've said before, this new government had a few false starts, but now it seems that we're looking at that harmonization coming through. So another group of people we need to think about is that 133 million Nigerians are in multidimensional poverty. We also have pensioners in this country who have contributed so much to this country, and at the twilight of their careers, their pensions cannot meet their living. So we need to be mindful of that. So the way we do that is that we need to restore price stability and get back to that. So what we are seeing now is that inflation is being targeted now at 21%, and the benchmark rate now is 24.75%. So what that means is that real rates and real yields are now positive. So for an investor that is thinking about towards the end of the year, you can now begin to make commitment to stability. Once we have this stability, then we can look at growth. I've shown you my charts, and we can see the relationship between GDP growth and inflation. We have to sacrifice growth over the next 9 months. GDP growth closed at 3.4% last year. Probably this year, we're probably looking at GDP growth of 3% because we need to bring down inflation. Over the last 20 years in Nigeria, if you look at the charts, there's no way that our GDP will grow if inflation is at 30%. So if you take a look at the charts over the years which we've seen, 2013, 2014, and you will see that GDP grew in excess of 8%. And what were the parameters? Inflation was at 11% and interest rates were about 12, 13, 14%. So if we can bring inflation down to 12%, I can assure you that the Nigerian economy will grow at least 8% or beyond. The $1 trillion economy is a different story. Let's remove that from the issue. You cannot reach, we know what it will take for us to get to 1 trillion. So let's focus on restoring Nigeria to 8% GDP growth and above. And if we can sustain what we see right now, which is now, yes, it's going to be tough. Nasima also is looking at his own interest from the industry perspective. But like I always tell the industrial people, do the consumers have the purchasing power to buy your products? That's why you are making sachets. You have a population that you need to empower. And when there's inflation, the purchasing power of the average person becomes low. Industry will also suffer. So we all need, including the banks. And by the way, the banks don't fund SMEs. If you take a look at the total credit to the private sector, maybe about 35, 40 billion, 80% of the large companies are, most of the big companies are getting 80% of the loans. Most of the SMEs in Nigeria are in the informal sector, and the informal sector is a powerful sector in this economy. It has over 22 SMEs, 22 million SMEs, and it contributes 50% of our GDP. The money that is in the informal sector is the one that the central bank does not have control. The central bank admits that they have close to 3.5 trillion
If I can just
outside the banking sector that they don't have control over.
If I can just jump in at this moment,
Yes.
while we're talking about the informal sector, the affordability,
Yes.
and things that the central bank doesn't have control of course, we know that food inflation is a massive driver of this, inflation that we currently see. Now, how much of this is money supply growth impacted? You've given us the historical antecedent, of course. We all know about the 30 trillion and so forth. Right, that's one angle, and of course that can be tackled by textbook economics.
There's nothing like, please, let's make something clear. There's nothing like textbooks economics.
Okay.
There's reality. Okay, and I understand where you're coming from.
There's something like orthodoxy.
There's orthodoxy because
Yeah.
something is
Isn't that just
orthodox
nomenclature?
because
That's just
no.
nomenclature.
It's orthodox because
No, we know where you're driving at.
No. It is tried and tested. It's like people say they are speaking grammar, is speaking English. Those things cannot work in Nigeria. And let me answer your question. Food inflation is not caused by all these factors you're talking about. We need structural reform. The key driver of food inflation is insecurity because our food basket has been compromised. Food inflation is a national security issue because most of our farmers in our food baskets are not able to go to their farms to produce. So our output for food has reduced. So the supply of our food or products is reduced. So basically, that is why you have that pressure. So the key driver to reducing food inflation is not only reducing the security issue, but also the logistics. Because the cost of transportation, because of the price of diesel, which is now coming down, has gone up.
So does this hike impact that in any way?
Yes, it's going to impact it. This hike is something that is going to shock the economy back to normalcy. Okay, because when I was screaming about ways and means here, people did not understand what I was talking about then because you had not felt the impact. Now you're feeling the impact of 30 trillion ways and means. We need to resolve that problem. And the way you resolve that problem is by price stability. If inflation spirals out of control, we're going the way of Venezuela, we're going the way of Zimbabwe, which is, what is happening in Zimbabwe firsthand.
They've done better in
Exactly.
managing their situation.
So what did Zimbabwe do too? You had to shock the economy with price increases to be able to do that.
Well, we actually had to dollarize our economy. We had to revert to using US dollars. But let's not take the
Those are
conversation
options.
there.
Okay.
Yes.
Let me shock you a bit.
Yes.
Textbook
Yes.
theories, and I know why you're kicking back because Nasima brought forward that narrative of this textbook analogy that for you to fight inflation, you raise interest rate. But it has worked. I mean, I get the analogy and the fight of the producers that the argument they will normally make is, our inflation is not being caused, because of those factors. It's because of food and everything, are physical factors. But what they also forget in the argument, like you said rightly, is that we have a money circulation problem, which is a humongous problem, and that is also increasing inflation. Hence the constant refrain you constantly have about, the ways and means that just put a lot more money into circulation, much money in circulation, chasing few goods, and voila, we had inflation. But a couple of things, I'd like you to veer off this a bit. There's been some talk about, amendments as regards the CBN Act based on what happened the last time. I want you to talk through some of your ideas as regards that. And secondly, we have securitized the ways and means, right? And we started paying it back. I mean, I know how you fought vehemently against securitization of the ways and means. The model at which we're going as regards it, is that the best way for you? Are you content as regards what we're doing with the ways and means now? Secondly, are you also content with the kind of stability we're getting in the foreign exchange market, where we are also now intervening big time, with different thresholds as regards, now we're selling back to BDCs like we stopped, in a while. It's no longer a case of willing buyer and willing seller. We're intervening. Yeah, we say we have a float, but we're intervening big time. And we're sort of like, fixing appropriate rates for the BDC to be able to control the market of some sort. Are you okay with that? And some people so let me use another textbook word, some liberal, your classical liberals, are saying, no, that's not the way forward. We should never do that. What do they mean by that? Because we don't have capacity to stabilize that and all of that. I mean, let's unbundle all of that conversation.
Okay. Thank you very much.
I know it's a lot.
Yes, that's why I'm writing it down.
Yeah.
Thanks, Rufai, for that. Let me talk about the stability in the FX markets, first of all. I think the last time I came here, I showed you a chart of how the FX in Nigeria was going, and I compared it. If you take a look at the volatility between the Naira and dollar over the last 20 years, and the dollar and the pound sterling over the last 20 years, you see that the band of the dollar to the pound sterling has just been between 2 to 1. Yeah. If you take a look at the Naira, you see what has happened in this country in the last 3 months is not explainable with the currency. Yeah. So the only reason why anything will happen like that with Naira going up is profiteering, or the fact that the United States carrier fleet has blockaded the port of Lagos and also the Gulf of Guinea to deny us oil exports and also issue the no-fly zone. That is the only reason why you see where dollar will start moving the way it is, but that was not the case. So now that we're beginning to see normalcy returning to this, I think it's important to see that there has to be some reality.
The proponents of the float are now fighting. They're saying, it should never be this way.
No. The issue of not being that way is there. The stability in the FX is that when the banks were going to close their net open positions, the rate started moving. And that's what we need to investigate. Within 3 days, we saw some changes that took the rates in a particular way, and that's what you need to investigate. So my own suggestion is the fact that I think do not let a willing buyer, willing seller. That means that the CBN can also sell its FX to their willing BDCs. They're also their willing buyers and they are willing sellers. So that's part of the open market system. So I'm not worried about that. What I'm more concerned about is that the central bank governor, in his speech at the Chartered Institute of Bankers in November, said that he was going to come out with a new foreign exchange mechanism backed by legislation, which is also work in progress right now. I think by the time that comes out, a lot of things will come to bear. But I think what we can see now is that speculation is abating. And with the harmonization of monetary and fiscal policy that we're currently seeing, we're seeing that rates are going down and foreign portfolio investors are coming.
The fiscal side is not doing their best.
No, the fiscal side, that's what I showed you. I've showed you they have to bear the burden of this interest rates increase. They are also saving a lot of the revenue. And like I've said, we'll come back to these issues when we come to that. Well, first of all, so the FX situation, I think, with the harmonization of fiscal policy and monetary policy is in place. And let us wait for the central bank to come up with their new policies on the foreign exchange to get normalcy. But what we have seen, like I've told you, is an aberration. And we're seeing that stabilization now, which is caused by harmonization of monetary and fiscal. And fiscal has to continue to do more, which is what you see. Now, let's go back to the next question on the amendment of the CBN Act and the Ways and Means. Yes, first of all, I think let me at this point of time thank your producers, Ozzy and his team, Dr. Abati, yourself, Vimbai, and that we talked about these ways and means, and we've highlighted it, and it's something that we have gone to it. First of all, I think a lot of the senators up on the floor have agreed that you cannot approve an illegality, which is the securitization. Now that we find ourselves in that, what pleases me now is the fact that it's all out there. Ways and Means is no longer on the books of the central bank. We've admitted we have Ways and Means. What do we do about it? We've also put it onto the money supply, and it's also registered with the DMO. So it has been recognized. So I think that is something that you need. When you want to deal with the problem, first of all, you recognize it. Now, the Minister of Finance has started to repay some of the Ways and Means also, which is also a positive development. Both the Minister of Finance and the central bank governor have now decided they're going to audit the Ways and Means account to give us an account of what happened. And also, that's also a positive development, which I'm also pleased about. The Senate also is investigating the Ways and Means accounts and these issues of the illegalities we've talked about that they approved. And Senator Tokunbo Abiru has also come up now with a bill for the amendment of the Central Bank Act, and particularly Section 38, which goes with tightening the components of the Ways and Means situation. So basically, I think all that, the remedial legislation which we talked about now is in the works. So I have contributed my comments to that bill and also sent my own contributions to the investigation. And they will have a public hearing on the Ways and Means, I think, after the holiday, Ramadan and Easter period. And I think it's important that every Nigerian should be able to pay attention to that bill, because if we're going to amend the CBN Act, we want to be able to ensure that we do not repeat the mistake of the past which we had done. So I think we've made some progress in that regards, and I think that all our own efforts collectively here, which we have highlighted the issues, is working, and I don't think we should relent until we get a proper bill.
Okay. Let me take you back to, well, food inflation. You were saying food inflation is caused by insecurity. Some other people will say, well, insecurity, that is not just insecurity, that the cost of transportation is also part of the problem.
Definitely.
Because if the farmers cannot go to the farms, the farmers who are able to produce, how do they transport? With the high cost of transportation and all of that. So it's not just one factor. However, you mentioned the fiscal strategies.
Yes.
Now, everybody talks about fiscal strategies, that there must be a proper alignment between the monetary side and the fiscal side. We've seen a lot of activities, 2 meetings now, 2 MPC meetings, and a raft of, reform measures by Cardoso's CBN. Now, can you take us through what is going on the fiscal side? You know, what specific, how is the fiscal side also trying to measure up so that we don't have one side moving forward, or we go back to the old situation whereby the central bank will be carrying the load on the fiscal side? Is there something that this government is doing already on the fiscal side that you consider of value? And then the debate about the amendment of the CBN Act of 2007. Now, what are those pitfalls that the lawmakers need to watch out for, so that they don't, in the process of saying they are reviewing the CBN Act, they then compromise the independence of the bank?
Yeah. Thank you very much. Let me take your last question on the... I'd read my comments. One of the things they were proposing is that they wanted the central bank to submit the budgets to the CBN budget to the legislator to get the approval. And for me, I think that's a no-no. I think for me, that's the biggest impediment on the central bank independence. I've told them that my own suggestion is that, first of all, the senators and the House of People have the opportunity to call the central bank to the legislature like 2 or 3 times a year to question them and ask them, and the central bank also forwards their accounts to those bodies. So they have an opportunity to review and ask them questions and find out what's going on. More importantly also, which is what my own submission is, that it is these same senators that confirm the people that go into the central bank. So it is now up to them to ensure that they put the right people of integrity into the central bank so that they can follow the rules as stated. So the House does not need to, the central bank does not need to start getting their budgets to the central bank for approval. That's the only pitfall I see in the proposed legislation, and I think I've made that clear. Now, in terms of the fiscal strategy, which this government is looking at, the biggest problem that I've seen with this government is the optics are wrong. We've seen the issues with the jeeps and what is going on, and all the budgets and all these accusations of budget padding and all. So these things do not. It doesn't augur well. Because if you see what other governments are doing in Argentina and all these other places whereby people are looking at austerity, what is your austerity package? How are you cutting back? But having said that, I think let us take a look at the realities. We saw the revenue mobilization, which we've seen in terms of the revenue report that I shared this morning. 2 trillion is quite, we can see that they're actually making 2 trillion a month, but they're only sharing half of that, which is a lot in itself. So you see that at this rate, they should probably have close to 15 trillion in surplus at the end of the year, which they should now begin to share towards debt service and to be able to maintain all the other things. Because don't forget that we have an 11 trillion deficit with this budget. Right now, the deficit is also higher than both recurrent and capital expenditure lines. So what I see that is positive is that on a month-by-month basis, you are seeing an increase in the revenues, and you are seeing a caution in terms of not sharing every money that is there. Then you're seeing a lot of automation with the revenue collection. And most of all these agencies that HEDO used to remit money every year or every 6 months, they're being forced now to remit their monies on a monthly basis. So you're beginning to see more monies coming in. So I think that by the time you take a look at a lot of that and you see those fiscal reports, it's quite encouraging in that sense. They're looking at that and seeing that. So while the revenue collection side is improving, I think what we need to see better for government is on the expenditure side, wasteful expenditure. And this contradiction between what the senator has said, budget it, has said something else, it doesn't augur well. But if you take a look at the facts on the ground and see what they're doing and see what the states are collecting, there is an improvement. So this needs to be sustained. And of course, debt management becomes very important. How do they restructure their debt, and how do they continue to, what they have been able to set, signals they've been able to send is that the bond markets here locally and the instruments they're issuing, even though now they're high interest rates, are being oversubscribed. So there is a lot of confidence on the domestic market for government instruments. On the international markets also, our Eurobond yields are declining, which shows a lot of confidence in that government. So they need to refinance a lot of those Eurobonds to longer maturities, and they need to continue to meet all the debt service obligations so that we don't end up the way of Ghana or Zambia or Ethiopia. So if we have that, or Zimbabwe, so we need to have that confidence.
On that note, so while we're talking Zimbabwe, I know our time is fast spent. We do have to go, but very briefly before you go, of course, everybody is celebrating a stronger Naira. Is it time to celebrate? Can people exhale? Is it sustainable? Where are we going?
It's
very
not
quickly.
About celebration. You know, for me, it's about understanding the dynamics of any economy, so that you don't have, there's no economy that has wild swings. For me, it's about stability.
Yeah.
So let us go into a stable mode, understand that the next 6 to 9 months are going to be of high rates regime to be able to restructure the economy and move. Don't celebrate anything. It's nothing to celebrate. Let's get back to normalcy. And then let's all dig deep, because, you know, it's affecting everybody.
What's
you know,
everything.
What's normal? No, it's not. I don't look at normalcy. My own is the fact that I cannot afford to replace my car now, as I'm telling you. So the car, yes, because my car's you know how much a brand new Toyota Corolla is? It's 45 million. Why would you spend that money on a car? So everybody now has to.
Why not try grade A to Kumbo?
Yeah, that's what I'm saying.
You buy a brand new. Try grade A.
No, my old car is still there now. The ones I bought 7 years ago. I've gone to spray it, sell the cars, and get everybody
and when you bought them many years ago, it was less than 10-15 million.
Exactly. So what I'm trying to say now is the fact that we all have to do that. I mean, if you travel a lot, which I do now, I have to travel on an economic ticket. So because I like to travel.
That must be punitive.
It's not. But if you want to continue to do what you used to do at that rate, then you need to make those adjustments.
Let's just have a method.
So basically, what we're just saying is that let us have price stability. Right. Let us think about the 133 million Nigerians in multidimensional poverty who are in the sachet economy. And more importantly, let us think about our pensioners.
That's right.
You know, so that whatever they have, you know, can have value. You know, once we have that, then we should be okay. So it's not yet time for celebration.
It's not
for
yet.
pensioners, we should try the triple lock.
It's always so refreshing being in conversation with you. Thank you so much for your time this morning.